Hey, everybody. It is Sunday, December 13th, 2020. And I wanted to sit down and make this video. And I think what motivated me, what prompted me to make this video, and actually, let me preface this by saying that I chose the title of this video hoping that people would find it. You've got two names there. I know one isn't nearly as well known as the other, but you've got two names there that at least some people are familiar with. And actually, a lot of what I have to say is nexus with some of the differences between the two. And I guess to lead up to what I want to say here, let me go back and say that when I first heard of Josh Sigurdson, I saw, okay, he was doing these interviews with Ron Paul. I mean, he uses nice sounding platitudes when it comes to somebody who supposedly supports liberty and that kind of thing. I'm like, hey, that's cool. But of course, he began to really push Bitcoin. And it was to the point where if you just made, just almost arguments that are self-evident, he would just turn on you very hatefully. And I'll never forget, one day, Josh Sigurdson was saying, the reason why Bitcoin was so superior to gold is because Bitcoin is an investment, gold isn't. Of course, he doesn't give any information to, or any evidence or any explanation as to why he says that. But, as somebody who's actually been an Austrian scholar, that is myself, for about 2 decades, and I want to bring this up because Josh Sigurdson, of course, he's attacked Peter Schiff. I think one of the few persons who really understands this is Peter Schiff, and I really appreciate the work he's done. And I wanted to address some common fallacies because I think they're so important in terms of understanding these fallacies to get back to where we need to be. I think a big reason why we're in such dire straits right now and why this country is in trouble is because and I say this like just dealing with my own family members. It's like they don't understand basic things. You look at the economics and financial profession, the lexicon has been totally undermined by government usurping the role of educator. Well, back to what I was saying here is that, okay, Sigurdson is saying gold is not an investment, so gold sucks, Bitcoin is. And as an Austrian schooler, I would be the first to admit that gold is not an investment, okay? And this comes down to understanding the distinction between trading and investing, okay? And a way that I distill this is that a trader buys and sells an asset based upon nominal price movements. In the case of real estate, it's the house, the price of the house. In the case of stocks, it's stock prices, okay? Now, it's really hard to be a consistent, good timer, to consistently time the market just right like that. An investor, on the other hand, buys and holds an asset for the income the asset itself generates. In the case of real estate, that's rents. In the case of stock, which of course, or equity in a company, it's the company you own, the company's earnings. Is it a dividend-paying stock? And I've noticed that the mainstream financial press has helped obfuscate this. Somebody buys and sells a house, and they manage to buy at a low price, and of course, the Federal Reserve pours on the money supply, and they're able to sell later at a higher price. Whoa, what a good investment you made. Or you buy a stock at one price, you turn around and flip it. You sell that stock at a higher price. Oh, what a good investor. You're an investor. You're investing. So they'll use those terms interchangeably. They'll use the term investment where it should be trade. And there's a big difference. And yes, it's true that as the Fed pours on the money supply, I mean, there are certain asset classes that are going to go up in price, and people might end up on the winning side of a trade here and there, okay? But that's not genuine economic growth. I would define genuine economic growth as the income side of it, which reflects the productivity, and more particularly earned income. There's a huge difference between earned income and unearned income that the government distributes. But I think if you really start to sit down and understand those different things, the difference between trading and investing, that is almost the key to understanding what is so wrong with our financial system and with our economy. Okay. And, inflation itself undermines actual income generating activity. It undermines earnings. People might make more in nominal terms, and of course, their incomes are being eroded by inflation. And then not only that, I mean, you think about it, if somebody is dependent on inflationary credit expansion, I mean, they are by definition a non-income generator. Inflation tends to benefit non-income generators at the expense of income generators. And what we're doing is we're substituting a printing press for actual income generating activity. And how does this relate to Bitcoin or gold? Well, gold is a good hedge against inflation. It's got intrinsic value. Unlike other commodities, it doesn't spoil. Try saving milk, for example. It's going to go bad after a while. Gold is durable. It's divisible. You can split it up into smaller fragments. It's homogeneous. And no matter what form so say, for example, a car is valuable, but you start to break it into smaller pieces, it ceases to be a car, that kind of thing. Okay. Well, gold has value, real value, intrinsic value. It's durable. It's divisible. And so it's a good store of value. That's why throughout history, it's been chosen as real money. It is a good hedge, but I would not call it an investment because it's, you buy gold, it's not generating income with you. So in that way, I actually agree with Josh Sigurdson that gold is not an investment. Okay. But neither is Bitcoin. Contrary to what Josh Sigurdson was saying. And you look at the whole Bitcoin hype, I think is largely manufactured because I think it serves the establishment for people to pile in to, a bunch of hot air like that, and, a phony asset class, meanwhile, the elites themselves, they're probably piling into, real estate and, gold bullion and silver bullion and real assets, and getting everybody else to go, speculate on these, bogus assets. But yeah, why is it that anybody demands Bitcoin? Because you can turn around and sell it to somebody else at a higher price. So for the dollars that they can get for it, and think about the circularity of that. I demand Bitcoin because I'm anticipating somebody else is going to demand Bitcoin. I mean, this is the definition of a Ponzi scheme, and it's really sad to see so many people conflate Bitcoin with gold, elevating Bitcoin up with gold and silver bullion. Now, I myself would be the first to say that gold and silver are not an investment, but at least they have intrinsic value, and they're durable, they're divisible, which makes them a good hedge against inflation. But see, that's just it. To realize your gain, it's all capital gains. You've got to, with gold and silver, for example, you've got to liquidate your position. They're not actually generating income for you in that way. So you've got to liquidate your position, and you're eroding that principle in order to actually use that gold and silver. So, well, I call them a hedge, not an investment, a hedge. In an investment, you don't need to liquidate your position. Whether it's a business that you're invested in that's generating income for you, an asset, say a house, you're a landlord, you're renting it out, you're generating income. The whole idea is you shouldn't need, or like, for example, in the case of trading a stock, you should not need to liquidate your position to, realize the gains or to, realize the returns off that. Okay. So it's all about the difference between buying and selling an asset based upon nominal price movements, a trade, and investing, buying and holding an asset for the income that the asset itself generates. And Understanding this is really the key to understanding what is so wrong with this economy.